Hello and welcome back to Explain the Charts. Today, we're taking a deep dive into the S&P 500, also known by its ticker symbol SPY, to analyze its current market movement and chart patterns. The S&P 500 has been under pressure lately, with major news outlets reporting on a recent sell-off. Investors are concerned about rising inflation, with the 10-year yield climbing above 4%. This indicates that borrowing costs are increasing, which can put downward pressure on stock prices. Let's turn our attention to the chart data, starting with the daily chart. Here, we can see that SPY has experienced a fairly steady decline over the past few weeks. The recent sell-off has pushed SPY below its 200-day moving average, which is often considered a key indicator of long-term trend. Looking at the last few weeks of candles on the daily chart, we can observe a series of lower highs and lower lows, reinforcing the bearish sentiment. The current price level is testing a key support zone, which could potentially hold up further decline. However, if SPY breaks below this support level, it could signal further downside potential. The daily chart also shows that the volume has been increasing on the recent decline, indicating that there is significant selling pressure in the market. This suggests that the recent sell-off is not just due to technical factors, but also to underlying fundamental concerns. Let's switch gears and take a look at the 1-hour chart to get a closer view of the recent price action. This time frame can reveal short-term trends and potential reversals. Zooming in on the last few hours of candles on the 1-hour chart, we can see that SPY has been trading in a narrow range. There has been a noticeable shift in momentum, with the price fluctuating around a key resistance level. A break above this resistance level could suggest a short-term bullish reversal. However, it's important to remember that the 1-hour chart is a short-term time frame, and the overall bearish sentiment on the daily chart could still prevail. A break below the support level on the daily chart could potentially negate any short-term bullish signals on the 1-hour chart. The 1-hour chart can also help us identify potential entry points for short-term traders. For example, if SPY breaks above the resistance level, it could be an opportunity for a long trade. Alternatively, if SPY breaks below the support level, it could be an opportunity for a short trade. Now, let's dive into the 15-minute chart to gain even more granularity and potentially discover some insightful patterns. Looking at the last few 15-minute candles, we can observe a series of small fluctuations around a key support level. If this support level holds, it could signal a potential short-term bullish reversal. However, if SPY breaks below this support level, it could be an indication of further downside. The 15-minute chart can be especially helpful for day traders who are looking for short-term trading opportunities. A break above or below key support or resistance levels can signal potential entry points. To summarize our findings, SPY is currently experiencing a bearish trend on the daily chart, but there are some short-term bullish signals on the 1-hour and 15-minute charts. The key price levels to watch are the support zone on the daily chart and the resistance level on the 1-hour chart. A break above the resistance level on the 1-hour chart could signal a short-term bullish reversal, but it's important to keep in mind the overall bearish sentiment on the daily chart. It's also crucial to monitor the volume. Increased volume on a decline suggests strong selling pressure, while increased volume on a rise indicates strong buying pressure. This can help us confirm or refute potential reversals. Remember, market analysis is a dynamic process. It's essential to stay up to date with current events and news, as well as to constantly monitor the chart data. Always use caution and conduct thorough research before making any trading decisions. Thank you for joining me on this journey into the world of SPY. Remember to subscribe to Explain the Charts for more insightful market analysis and chart breakdowns.